Hello, welcome to Tuesdays with Lloyd. I'm your host, Enya, National Practice Leader in Risk Management for Lloyd's US. Today, we'll bring you the 9th edition of Lloyd's Syndicate Showcase, a monthly profile will welcome senior leaders of each syndicate to share their perspectives on topics including current and future market conditions, US business plan, and their growth opportunities. This program also provides a great platform for our audience to have a direct and live dialogue with the senior leaders of each syndicate. This year, we have already featured Apollo, Aegis, Hiscox, Ascot, Munich Re, Dale Underwriting, MS Emlyn, and Atrium. Today, we're very pleased to welcome Hamilton, which operates Syndicate 4000 at Lloyd's. Join us live today from London are Adrian Daws, CEO, Hamilton Managing Agency Limited, Miles Osorio, Active Underwriter, Syndicate 4000, Mile Alexander, Chief Underwriting Officer, London Branch, Hamilton Insurance DAC, Sima Adhya, Dr. Sima Adhya, Head of Space and Head of Innovation, Hamilton Managing Agency Limited. We do have a brief biography of each speaker in the chat box for your further review. Before we start, just a couple of housekeeping items. We strongly encourage you to ask questions throughout the session, but please do submit questions using the Q&A tool. It's much easier for us to manage questions that way and to assure we answer as many as possible. And our session, as previous sessions, are being live streamed on YouTube channel and being recorded. You can find the link in the chat box, and please do feel free to share the link with your colleagues and clients who might be interested. Without further ado, let's get started. Adrian, if I may, let's start with you. Can you tell us about Hamilton, your history, and your place in Lloyd's marketplace?
Yeah, sure. Thanks, Enya. Just before I do so, I'd just like to thank you and the team at Lloyd's for putting this on and giving us an opportunity to speak to you. And importantly as well, thank you to all who have taken the time to participate on this call and learn a bit more about Hamilton. So just a bit of background on us as a group, and then I'll tell you a bit about the syndicate. So we as a group were established in 2013. We are a Bermuda headquartered reinsurer and insurer. We have grown from pretty humble beginnings. It's fairly small staff, and we now have over 400 people. About 60% of the business that we write is in the insurance lines, and about 40% is reinsurance. So we are very much focused on specialty and casualty lines of business. And we write just over $1 billion of income. So our platforms include the Bermuda platform that I've referred to, the Lloyd's platform, which is really what we're here to talk to you a bit more about today, and Hamilton Insurance DAC, which is Dublin-based carrier. So I guess just to answer the question a bit more specifically, we entered Lloyd's through the acquisition of an existing managing agency in 2015. I've actually been with Hamilton for 6 years, so pretty much since the start of that journey. So we started writing for the 2016 underwriting year, and we were initially with a relatively small syndicate starting from scratch, very much focused on organic growth. But that was tough. It was a very, very tough trading environment. And there was a pretty strong headwind of the soft market against us there. So we were always interested in looking at ways that we could add value to our business in Lloyd's. And in 2019, we completed the acquisition of Pembroke Managing Agency. So that gave us much more scale in the Lloyd's market. And now we write over $600 million of income on our Lloyd's platform for this year. So as I'm sure you can imagine, a lot of time, effort, and energy since August 2019 has been taken up in integrating our two businesses. I'm delighted to say on the underwriting side of things, one of the reasons that the deal was attractive for us was there wasn't a huge amount of crossover. So the underwriting was integrated very quickly indeed. And then further to that, we've been doing lots of work on integrating back office, mid office, data systems, etc. So I'm very pleased to say that's substantially complete now.
Miles, now turning to you. Adrian touched on the history of Hamilton in the Lloyd's marketplace. Can you elaborate on the journey of Hamilton within the market and also your plans for your syndicate on the underwriting side, in particular for the coming year?
Sure, thank you very much, and good morning and good afternoon to everybody. As Adrian alluded to, it's been a long journey. In some ways, it seems a little bit longer than 6 years. It feels like that sometimes. But ultimately, it's been a very interesting, educational and a rewarding journey. So as Adrian alluded to, we did start pretty much from scratch, and we built the managing agent and the syndicate. We built all the functions, excuse me. So we built not just underwriting, but actuarial, finance, IT, claims, everything really. And I think it's a testament to the staff that we've hired and also to the culture that we've tried to build as well, that a lot of people that we hired all those years ago are still with us. So from humble beginnings, we now find ourselves, as Adrian says, with 600 million plus in income for our plan next year. I think one of the things I'm most pleased about is not just the business mix that we have at the syndicate, which we're very comfortable with. We think we've got some really good class heads here who are experts in the field. But if you think about it, everybody in this call has been unfortunately impacted by the events of the last couple of years. And when you spend 6 months or so looking at acquisitions and getting that through, and from when the deal to buy Pembroke closed to really the beginning of this year, we didn't have all the combined team in the same office. So to start with, when the deal closed in August 2019, we were spread over 3 offices. Well, the office I'm sitting in now was refurbished, and pretty much on the day it opened, we were sent home. So it's really only this year that we've had everybody back in the office. And I suppose, along with a lot of other people, not just the integration in terms of systems and underwriting, but trying to define the culture of the combined entity has been really challenging. But I think, up until recently, we've done really well, actually. I think there were really good things from the ex-Hamilton, if you like, or legacy Hamilton learned from Pembroke. I think one of the things that Pembroke did really well was to really make class heads accountable for the business and make sure that we've got the right underwriters there. Whereas at Hamilton, we were a little bit smaller and we were doing all sorts of things along with our day job. And I think Hamilton has always had a very collegiate, very collaborative culture. So we tried to take the best of both worlds and merge them together. So as I say, it's been a long journey. It's been hugely educational. And in fact, it's been a real privilege. There are a finite amount of syndicates and managing agents in Lloyd's. And to have the opportunity to start something new is obviously challenging, but it's really nice to see where we are now. I often say, excuse me, I often say that, I feel like the first chapter has closed now. And as soon as we get past Christmas and New Year and everything opens up again here in London, we can look forward to the next chapter of the next 5 years or so. So yeah, hugely rewarding, really challenging, but by and large, a wonderful experience.
Thank you, Miles. Adrian, during our dry run sessions, I sense a lot of pride on your team on what Hamilton has accomplished in the past few years. So can you please tell us how, as a syndicate, you distinguish yourself from the rest of the pack at Lloyd's marketplace? In other words, give us a few highlights of what makes you so proud.
Yeah, so I think you're absolutely right. I and the team here are very proud of what we've accomplished. And Miles has spoken there about the background, and I'm sure you all remember only too well that the last 2 years have been particularly trying just in terms of getting people together and collaboration. But I think it's the way that our people have come together and the way that we've worked as a team that's really helped us to achieve what we've done against a difficult backdrop in a relatively short period of time. So the syndicate, as we have it now, has gone through some changes. We've made some changes to our our offerings. So there are certain lines of business that we no longer write, but the lines we have, we're constantly reviewing. We're constantly looking at portfolio optimization. We're very much we're very happy with the balance and the diversification that we've got in our book of business. And I'm really really looking forward to next year and the years ahead, and really building on what we've achieved so far. So we've very much grown in line with the market. The market clearly has improved. The trading environment has improved over the last few years, and Lloyd's is and will remain a key cornerstone of the Hamilton Group's offering. It's very much a market that we're committed to, and one in which we've ambitions to grow and do more in over the next 5 years.
Thank you, Adrian. You mentioned the word growth. So Miles, turning back to you. We understand Hamilton has expanded your footprint in the US marketplace. So can you share with us, without giving us too much secret, some insight into your risk appetite in the US marketplace? Also, in which class of business are you growing in the US?
Sure. Just I probably should answer your previous question, but I'll do both at the same time. So for 2022 at the Syndicate, we feel, as Adrian says, we've got a really good business mix here now. So certainly in London, it's more of the same. We've got about 20 classes. We feel that we're very well recognised lead markets in a few of those, being fine art and specie, accident and health, financial institutions, professional lines, space, and what have you. So it's very much more the same in London. The US is key to us. We started with very little presence there. Now we have 3 offices in north to south, starting in New York, then Richmond, Virginia, and down to Miami. And those offices are looking to write about $85 million next year to us, which, part of $600-ish million is significant. And our anticipation is those will continue to grow into 2023, 24 and beyond. So we're investing, I think, heavily in those offices. We have plans to build them out and recruit additional teams. So in New York, for example, our colleagues there write political violence, terrorism. We have $500-600 million worth of consortia line slip capacity from third-party providers behind us. So we're very much recognised as a lead there. That team's growing. The income is growing. It's very profitable to us. They do a cracking job. Moving to Richmond, some new colleagues there. They've been here just over a year writing environmental liability business. Again, starting with 1 or 2 individuals. It's up to 6, I think now, 5 or 6 people. From no income to over 20 million in a year is just fantastic. We're really, really pleased with their contribution. They are known as market leaders in their field, and have continued to trade with people they traded with in previous lives. So that we have plans to grow that very much. We consider both those lines as cornerstones to the Syndicate as well. And then if you go to Miami, that office is a little bit more multifunctional. So they produce business in several lines, including fine art, cyber, A&H, and 1 or 2 others. But predominantly that office concentrates on surety business, most of which is generated from our Latin American clients and colleagues. So a real mix, I think, a really good positive mix. All the lines are running really well. There's some seasoned, if I can call them, veterans involved, and some new people in there. So there's a really good diverse mix of people. And we're thrilled that the support of our US clients and brokers, wholesale retail, has been fantastic for all those teams. So we're really thrilled with the contribution, and absolutely will continue to invest in those 3 offices.
That sounds exciting. And Miles, I remember, I've been really having the pleasure to work with several leaders of your team. And it's my understanding that Hamilton leads several consortium at Lloyd's. Would you mind mentioning a few of those examples?
Yeah, sure. So we do have about half a dozen consortium here at Lloyd's, and obviously not including the one that we write out of our New York office. It's a really important. It's more than a source of income for us. It's recognition that we have lead capabilities in a market, particularly when Lloyd's talk about lead and follow capabilities. We don't think we're all things to all people. But where we know that we've got the right capabilities, then we like to demonstrate it. And having people support Hamilton Group and the Syndicate is vital to those plans. So we've got Fine Art Consortia, we've got a Cyber Consortium, we've got a few others, and we've also got a Space Consortium as well. And I think space is a really interesting line of business for us, and it's one that we've been in for quite a few years now. And that is probably a good opportunity to pass over to Sima to have a little bit more information for you on that particular line.
You just did my work, Miles. Thank you so much.
Sorry, I didn't mean to
Nice to transition to Sima. So Sima, let's turn to you.
Yeah, thanks, Miles. Thanks, Enya. So as Miles says, I lead the space team, and Hamilton actually lead the Space Consortium. So we write on behalf of 6 other Lloyd syndicates. This really allows us to leverage our expertise and effectively double the line that we can offer to clients and brokers. So I'll just give you a couple of minutes overview of our class. So our client base is very global. Over 30% of our insureds are from the US, but we also see clients from all over Europe, from Russia, from China, Japan, from South America, and increasingly from new spacefaring nations. Most of our clients, or many of our clients, are telecoms operators. So they provide communication services such as data, broadband, and video. But we also insure lots of imaging satellites, navigation satellites, and missions to the International Space Station, to the moon, and sometimes beyond. So a wide range. But in terms of coverage, the majority of our book is asset coverage for the satellite itself. So cover typically starts from the point of launch and runs through to the end of the satellite's first year in orbit. There'll usually be an annual policy which renews annually after that, and through to its to its end of life, which is typically between 5 and 15 years. So in our portfolio, we would normally insure approximately 30 to 40 launches each year and 250 or so satellites that are already in orbit. So to date, most of our insured assets, as I said, are large communication satellites, and they can be worth up to anything up to about $500,000. So whilst going forward, we still expect to insure a lot of these, we are seeing many new developments in our market. So it's a really exciting time in space right now. The technology is developing really rapidly. So for example, reusable rockets that can be used tens of times, and the miniaturization of satellites, developments like these are really lowering the cost of access to space. And that's making all these new space ventures commercially viable. So we are now seeing many new types of risk, including debris removal, in-orbit servicing and refueling, and even space tourism. So it's a really great time to be a space insurer. There's lots of new risks that we need to analyze and understand. It's very interesting, but of course quite challenging, these new risks. So to get to the level of understanding we need, we have a team of experts with PhDs and with industry experience. I used to work as a space missions engineer, and I have a doctorate in satellite astrodynamics. Actually, most teams in the industry will have a level of technical expertise, and that's really key to evaluating risk and being able to price risks appropriately. So that's what I was going to say. I hope that's given you a very quick overview of our space account.
Wonderful. And Sima, I know you wear many hats, and head of space is only one of those hats. I noticed you also have the head of innovation, under your belt. So can you tell us, in terms of the future of our industry, from your perspective, you head up the innovation space in Hamilton. So can you share some insight in that space?
Yeah, sure. So that's right. I do lead the innovation activities here at Syndicate. Well, clearly technology is key to modernizing insurance, and there is a huge will and drive across all parts of the industry to do this, to use more data, to improve underwriting, and to speed up claims. And there does need to be more efficiency and automation where possible, and then people can do the added value problem solving and the creative parts of the job, and that will always be needed. But I really think there's so much data which is passed around within our industry, and it's just the challenge is how we make the most of it, how we gather it, how we store it, and how we use it to be better and faster and ultimately more profitable, but while also benefiting our clients by being quicker and very user-friendly. So like others, we are trying to get better at Hamilton. So we're always looking at ways that we can improve, all our systems and processes. And I think that, there's much to do, and there's lots of exciting areas. But one that I'm particularly interested in at the moment is new products that are now feasible because of how they leverage data and technology. So we see a lot of that currently in the Insurtech space. So a couple of years ago, Hamilton made a strategic investment in an Insurtech Fund. which invests in early stage startup companies. And we did this really in order to give us access to new products that we may otherwise not see, and products that aligned with our appetite. So we actively look to put capacity behind those new products and companies that we believe will be sustainable and profitable and have clear benefits for clients and insurers alike. So we've written a few of these products over the last year or so, including a range, actually, a crypto wallet security product, a surety bond for petrol retailers. And we recently mentored a team through the Lloyd's lab with a product relating to IVF treatment. So really very wide ranging. And it's the access to the data and the more efficient distribution methods that make some of these ideas that we're looking at more viable now. So an awful lot going on in this space.
That sounds very exciting. You have the best job in the world. So back to you, Adrian. The word culture come up quite a few times in our conversation already. As we all know, culture has become increasingly important in attracting and retaining talents for our business. So can you tell us about what it's like working at Hamilton, and how do you characterize the culture at Hamilton?
Yeah, sure. Look, we've heard words collegiate and collaborative, and today, and when I think you think of a firm's culture, I think the best people to speak to about that are our colleagues, the employees of that particular organisation, because they will tell you their experience. And to that end, we regularly ask all our colleagues to complete pulse survey, which is a brief but regular survey, which really helps us understand how people are feeling about Hamilton and the culture. And really importantly, I think as we do it regularly, we're able to demonstrate to our employees that we act, that we listen to the feedback that they give us, and that as a management team we respond to that. So we get great participation in it. The participation is near universal, which in itself I think is just a great indicator of how engaged people are. And we get we've got some really strong indicators that people enjoy working here. So 70% of our employees agree or strongly agree that Hamilton's a great place to work. So when you asked about what I feel proud of, that for me is something to be really proud of. We also get great feedback about how people can be at work. So can they be themselves? Can they bring their whole selves to work? And 82% of our employees say they can. So they're just a couple of indicators and things that we can pull out of those surveys, and some of the things that we ask our colleagues, which really help demonstrate that I think our culture is definitely on the right track. And we, in terms of how people feel about the working environment, how they interact with colleagues, we get teamwork always comes up as being something that people feel very positively about indeed. So 90% of our colleagues say that they feel that teamwork is very strong within the company. So I would say that really sums up and characterizes the culture that we have here at Hamilton.
Thank you, Adrian. When it comes to culture, the word D&I always come to our mind. I want to turn to Mel. He touched on the topic of diversity and inclusion. So can you share with us more Hamilton's effort on the D&I space, Mel?
Sure. Well, thank you. Adrian's stolen some of my lines, so I don't know where I go from there. But anyway, for us, I guess, we're just stepping back a bit. As Mel said, our companies came together 2 years ago. Out of the group here, I'm the only one that wasn't the original Hamilton. I joined from Ironshaw, Pembroke. And the open management style in the group I believe, is very refreshing. And it offers us a lot of opportunities to develop and grow despite the hurdles of integration and hiring through lockdown, which, by the way, we've managed to hire several team leaders in the underwriting side and new operations staff. Somehow our message is getting through, I guess. And a woman of a certain age as I am, 40 years in the market, I have to say that I'm delighted that diversity, equity and inclusion has now become such an important subject matter, because it's something quite dear to my heart. And You know, we're committed to building a diverse workforce whilst cultivating a culture where all employees are comfortable bringing, as Adrian said, their whole selves to work. I guess it's our strapline, so apologies for repeating it again. But we're really proud that 33% of our group executive management team are female, including Pina Alba, our group CEO. And half of our divisional heads in the international underwriting team are also women. So I guess, you know, our diversity statement inclusion is, our diversity and inclusion statement is open minds, open doors. It declares our commitment to building the cultural competence. I think it shows our willingness to become more aware of our own heritage as a corporation and deepen our appreciation of how the industry is progressing. And I do believe we're market leaders insofar as, you know, the diversity in our group and the strength of our management team for that. I was going to repeat the pulse survey conversations, but we've already covered that. So many of our colleagues give us great feedback and tell us how good it is to work here. We're not perfect by any means, don't get me wrong. We like to blow our trumpet. There's always room to grow. But I think with the constant contact that we have with the surveys and the open management style we have, we even have a sort of naughty corner as you come in, which is full of naughty us. And I think we create a fun environment for us to work in. We continue to work towards our goals through various initiatives. We have an extra day of leave for every single person, and it's to enable them to do something meaningful to them. We call it My Day, and they can literally take it off to do whatever they wish to do, whether it's charity work or something for their family, whatever it might be. And it's our way to celebrate our diversity and advocating that our people can be comfortable bringing their whole selves to work and to support their wellness. We also have, we're very committed to supporting the health and well-being of our employees, and we've created Unmind. It's Hamilton's online workplace mental health platform that everybody can access. I don't know where everyone has, but I certainly should have used it during lockdown, certainly in January when I struggled through what was a difficult time to have it locked down again. And then we had also various programs throughout the pandemic, through the lockdown, that were just incredible, whether it was an online yoga session or whatever it might be. Not that I did that, but anyway. And we have a D&I forum also that we concentrate very heavily on, you know, getting things changed, on modern racism, embedding inclusion, and unconscious bias training was a big focus for us this year. Our recruitment is very focused now. We're always advertising on the basis of showing and reflecting our D&I commitment. We removed degree requirements in most of our job ads because we feel that we want to encourage everybody to apply. Our interview technique is included with a guide to unconscious bias. We engage with various D&I networks throughout the community, and we've always offered flexible working environment. Even before COVID, it's something that we've always believed in. So I think that's what encourages people to join us.
Looks like you're recruiting people from the audience right now. So if you have any interest in joining Hamilton, you can reach out to Mel from the audience.
There you go.
You know, when we discuss the topic of D&I, the other topic come to my mind is ESG, which is a very, very important topic across the board right now. So we understand Hamilton, both at the group level and at Syndicate level, are very keen on becoming a socially responsible organization. So Mel, would you mind just elaborate on Hamilton's position when it comes to ESG?
I sure can. Well, we share an imperative to impart a meaningful impact on society, both as underwriters and as global citizens. We strive to be responsible insurers in all aspects of our operations and business practices by considering and recognising the impact of society, communities, environment, the climate change, for current and future generations, and for all our stakeholders and partners. I guess more importantly, we're also here to help our clients through that journey. It's going to be a difficult one, we're all aware of it. But it's something we take very, very seriously. As a very responsible underwriting team, we embed thoughtful risk management, assessment practices into our decision making, and build relationships with similarly like-minded people, clients, organisations, developing nations, including those investing in alternative energy solutions. We have an underwriting group, working group actually within Hamilton, who are actively working through all of our risks and how we model them, what our appetite is, how we can improve, how we can risk select better. And this is, you know, as I say, it's going to take some time, but we're very, very active in making sure we're striving to get the right risks in. We support all of our employees and the communities it serves to continue to promote equality and diversity and non-discriminatory practices. Why have I gone into that? That's a social impact, I guess. And from the investment side, Hamilton deploys its investment capital responsibility. Our investment decisions are driven by board-established processes and guidelines and are monitored regularly to evaluate alignment of our holdings and our corporate values. And we recognise our responsibility as a global corporate citizen and our accountability to our stakeholders, our investments, our employees, our communities, regulatory and rating agencies, clients, vendors and business partners. But as I say, most importantly, we're here to help our clients achieve it with us.
So if I hear you correctly, you're going to walk with your client together in transition for this important challenge we're facing together as a global citizens, right?
Absolutely.
As we wrap up the prepared questions session, I want to go back to Adrian. Ask you to tell us, what do you look forward to for next year? What is the most exciting part you're looking forward to the future year for 2022?
Okay, well, I very much look forward to the continuation of this positive journey we've been on. So that's both in terms of the improving our culture, but also the improving results that we're seeing in our business. I guess people, being able to meet people. We're fortunate here. We over the course of the last few months until the recent days, we've had a number of our colleagues return to the office. They've wanted to return to the office, and I think that's very much helped us. And I think it creates a nice atmosphere, it creates a good atmosphere, and it certainly fosters teamwork with people being back in the office. So I would very much like to think that we may return to that at some point in the new year. And then travel, being able to get out, see clients, see brokers, see our colleagues in the States. Miles mentioned a few people that we have that work for us out there, some of whom I've not even met in person yet, believe it or not. So Miles and I both intend to travel to the States. We're going to Miami, meet the market, and I very much hope that we will meet some of you that are on this call now, that we'll be able to meet you there. So I think as we go into next year, let's hope we can put it's nearly 2 years of COVID affected restrictions behind us and move on. So and I guess I don't know whether I will get the chance. I know that there's a time for questions, but thank you very much to everyone on the call. I wish you all a very joyful holiday season and wish you all the very best for a healthy, happy and prosperous new year. But I know we may have some questions.
Thank you, Adrian. I saw a couple questions in the Q&A part. So Sima, this is a question for you. Given like the owners of Amazon, like Bezos, as well as people like those who are really into space, are you guys involved by any means into those big shots who are in the space program right now? Are you guys involved in any aspect of those coverages?
We have visited those companies and we've been talking to them for several years, so we do hope to be engaged with them going forward. We are currently with the human spaceflight stuff, that's still developing, and I'm not aware they've those flights that there's been insurance, so but it's something that we are interested in looking at all the time.
Wonderful. And the other question I saw from the audience is regarding the recruiting in the pandemic era. As you mentioned earlier, you can't see people, you have virtual interviews. So what is the special things you guys have been doing in terms of recruiting new talents and attending the bias talents at Hamilton? Would that be Mel?
Sure, I'll start and then I'll probably hand to a colleague on this. So I think we importantly, we have very definitely continued to recruit during this last period. We are on a growth trajectory as a business, and we've recruited several senior people. We very much we've had no difficulties attracting talent. I think people are drawn to Hamilton, to the culture, and they can see the positive trajectory that we're on as a business. I guess, Miles, you're within the underwriting teams, you've recruited quite a few people. So is there anything you'd like to add particularly on that?
Yeah, thanks, Adrian. I think you know, when we got sent home, probably sitting there going, how are we going to fill this position or that position? And actually, quite the opposite has been the case. I think there's two things that have helped. I think you know, some of our existing staff are very well connected and therefore probably knew people to talk to, number one. But I think, you know, as our profile has risen over the last couple of years, as people come in to see us when they could before the pandemic, and just generally get to know our group, I genuinely think that people recognise this is a good place to work. So when, you know, we ring people unsolicited, which is very rare, it's normally sort of word of mouth, etc. Most of the people that we've recruited have been very happy to talk to us. So I'm really quite pleased that it just hasn't been an issue for Ashes. And I wish I had the numbers in front of me. Unfortunately, they're at home because that's where I was working yesterday. But the number of people that we've recruiting in underwriting is frankly, you know, staggering. In terms of a percentage of the start, you know, there's about 90 underwriters here, and I would say about 20% of those are varying different levels. You know, entry level assistant underwriter up to some of the class heads that we've recruited. It's a broad spectrum. You know, we've recently entered a new line of business for K&R as well. That was an introduction by another member of team for us. So it's been interesting. I guess the downside, because there has to be one, right? It's not always a bed of roses. Is when you do recruit people and you want to talk to them, it's nice to do it in 3D as opposed to on a call like this. But by and large, you know, in fact, without exception, everybody recruited has fitted in really well. You can still, I guess, judge someone's character and when they're going to fit in on calls like this. But yeah, next year, hopefully we can go back to recruiting in 3D. That's my hope.
That's our hope together.
Absolutely.
Sima, you mentioned earlier in your conversation regarding technology, the role it plays in underwriting in the entire business model of insurance. How do you feel? I mean, this is probably a question for all of you. How do you feel the impact of technology in the role of distribution? You know, we work as Lloyd's, we are really driven by the model of a broker-driven marketplace. How do you see the role of technology impact on our distribution model at Lloyd's?
Shall I take that one? I mean, I would say really, Enya, that we data is key, obviously, to analysing of risk. So I think that we're really looking to partner with wonderful cover holders and brokers. Our distribution is always through the standard channel. It always has been, and it won't change. Our US offices are complementary to everything we do in Lloyd's and in our company as well. And so I think that really we're looking just to get partners that will enable us to get quicker, more accurate data to assist us with our underwriting and our analysing. And when we have, you know, catastrophes, sadly, you know, we can look at where our exposures are and try and manage that and manage the claims process. So for me, and I'm more a property girl, that's kind of where I see data from my side of the business.
Any other thoughts from the group?
I'd echo that. I think data, of which I think Sima said, we have a huge amount of data as an industry. I think one of our what we've got to do and what we're attempting to do here is to work out how best to use that data, how to analyze that data to help us make better decisions, to help us design better products for our clients, and to help us you know, build better products and look at the profitability of our portfolio. So I think data really is key now and will become even more key over the next few years.
Thank you, Adrian. Thank you, Mel. There's a question coming from Michael in the audience. What is the Hamilton's underwriting appetite for life science business, in particular for Lloyd's domiciled and with emphasis on dietary industry?
Miles, sorry, did you say life science?
Yes, life science.
Okay, so it's not currently a line of business that we've really looked at. We have it would fall really within our professional lines unit. but to date, it's not been an area of particular focus for us, and it's not planned to be an area of material focus for us in the immediate future.
Thank you, Adrian. Next question. So this comes from Carrie in the audience. So how accurate do you believe the model has been for Hamilton over the past few years? Are you making any changes as a result of actual claims compared to model as a predictive tool?
Do you want me to jump in?
Sure. Yeah.
So we have our own proprietary tool at Hamilton, which is, if you like, the Hamilton view of risk. And it's driven from AIR. And I think it's safe to say that I think the models are invaluable to our industry. And obviously, everybody uses one of the two major vendor, mostly, models available. I think at Hamilton, we have a healthy suspicion of some of the output. I think they're very, very good for some lines of business, less so perhaps for others. And I think if you look at what's happened this year in terms of winter storms and flood, I think is also a particular concern globally when you talk about models as well. So yes, models are important to us. They are absolutely a tool that we embrace when it comes to our underwriting in certain lines of business. But I think at Hamilton, we're always very good at looking at the output and trying to second guess it almost. I'm not saying that we rewrite the book, but we certainly wouldn't push a button and take that as the answer in any of our lines of business. So we're constantly looking to review our view of the world in terms of all sorts of, not just US wind and quake, but flood in particular, hail. That there are lots of, and I think it's a fairly timely topic really with the dreadfully unfortunate events of tornadoes in the last few days. So yes, Hamilton embraces AIR and our own view of risk, but it's a tool. And I think to take away, we'd never ask our underwriters to just go, well, that's the answer. We employ people to underwrite, so it is absolutely a blend, and that will continue to be so. And on that basis, yes, we, over the last couple of years, what we thought was correct 5 years ago, 6 years ago when we started, probably wouldn't be correct now. In fact, it's almost certainly not correct now. And global warming, we're constantly questioning whether we're charging the right money, whether the model output is correct. So it's absolutely something that we look at every day in our working lives.
Wonderful. There's a question from the audience from Tony Joseph. He's asking the overall results of underwriting of Hamilton in the past year. I think maybe too early to tell, but do you have a sense of where you stand as a syndicate performance-wise for 2021 at this time?
Sure. So Hamilton Syndicate has been a second quartile syndicate for the past 2 years in a row. The only real relevant data point we would have at this stage would be the half-year numbers and how we compare to Lloyd's at that stage. Clearly, since then, there have been a number of catastrophe events, including the ones that Miles referenced, unfortunately, over at the back end of last week. Lloyd's half-year result was 92.2, I believe, net combined, and our syndicate was broadly in line with the market results. So, as I say, a lot's happened since then. So we will see how we fare over the next few weeks up until year end. But the performance of our syndicate has on the whole been consistently very strong relative to the market.
Congratulations. One of the key advantage of Lloyd's markets is the face-to-face interaction. The fact we have those underwriting personnel on the floor to make decisions right in front of the brokers. So how do you view as a group the fact of pandemic? We have shut down, we have reopened now, the floor is reopened. How do you view the future of the underwriting room at Lloyd's market, which we are so proud of, which is right behind me, as you can tell. I can't wait to be there again soon. But Adrian and Miles and Sima and Mel, how do you view the future of the Lloyd's room in your perspective?
So my personal view is that the Lloyd's room definitely has a place. I think it's being able to trade with people face to face really helps the clients get the best result. I really don't know how the room will look in the future. I'm not sure anyone could have pictured this market trading for the last 2 years without being able to use the underwriting room. And I think the fact that we're all now so used to using IT and transacting business electronically will certainly mean there'll be some change. Miles, do you have a view on the future of the room?
I do actually, and someone in Lloyd's asked me this the other day. I think you know, I'm of an age when I'm embracing new technology when Sima talks to me about it, and it's a bit new and shiny, but I like it. But I'm also of an age where I think it's imperative, and it's purely a personal decision, obviously, that Lloyd's maintains some sort of physical presence in the room. I in my 30 plus years working in this industry, both as a broker and as an underwriter, I've met some fantastic people that travel here from all over the world. Obviously a lot from the US and elsewhere. And I think Lloyd's would be, or certainly the London market as a whole, would be slightly diminished, if you like, if there wasn't a physical presence. There are plenty of people, hopefully some on this call, who have travelled over to London, you know, and it's not a cheap pastime, is it, these days, getting on a plane? And I think it's very good for our clients and brokers to be able to go into the room and see half a dozen underwriters over a period of a couple of days, and, you know, go out for dinner afterwards just around the corner and everything. So just purely personally, I'm all in favour for Lloyd's maintaining the physical presence underwriting room, although I appreciate things change over time. So as Adrian says, it probably won't look like it has done in the past, but please keep something.
I might add that I think from the pandemic, we've probably learnt what we can do remotely and what actually we really need to be together to do. A lot of the magic only really happens when people are together. So I think there should always be a space where that can happen, whether it's going to look the same or whether parts of it are going to evolve. I think there's probably room for that. But there should definitely be something maintained where people can get together face to face. And, you know, that's a lot of the, as I say, the magic, the things you don't think of, a lot of the accidental meetings, all of that, I don't think can happen virtually, really, not like it does in person.
Any other thoughts from the group?
Well, we truly I think we really miss seeing our brokers and our cover holders and our clients and our retail agents and wholesale agents visiting, and just, you know, there's transacting, of course, and there's trading and there's negotiation, but there's also some time to get to know people as well, which is really important, that we have that connection that isn't quite as possible over Zoom.
Thank you. 2 more questions from the audience. The first one says, you have discussed the diversity within Hamilton, but do you also make considerations when looking for business partners?
So to date, the answer to that, no, we haven't explicitly looked at diversity within or when looking at our business partners. But I do think that as this becomes more embedded, it could well become a natural next step. We've very much been concentrating on our culture, on internally facing, looking at DEI for us as a business. So though to date we haven't, that's not to say that we wouldn't consider it in the future.
Thank you. Next question from Patrick. What is your appetite for the energy industry, in particular exploration and production? The industry has not got a lot of positive media attention recently, but still requires insurance. So what's your opinion on that regard?
Miles, is that a question I can pass to you from the underwriting?
Yeah, sure. We do write energy business, not so much on the physical damage side for renewables at the moment. We are looking to, is an area where we think we'd like some more expertise and a bigger understanding. But we do write an energy book, both in our treaty portfolio and a standalone. The standalone is mostly offshore. And has performed very well. I would it's a really good book for us. It's reasonably modest, and I think that's probably stood us in good stead over the years. I think if we wanted to grow it exponentially, we'd need a much bigger team with a much bigger line. So it's an important line of business to us. We are, I would say, reasonably conservative in what we do, because if it ain't broken, don't try and fix it. I think it's probably a good thing. Is that fair, Adrian?
Fair enough. As we come to the end, I'd like to ask around, Adrian, Mel, Miles, Sima, if you have any final thoughts to share with the group.
No, as I say, I just like to reiterate my thanks for you for putting this on, and thank you to all who have taken the time to participate. So thank you.
We look forward to seeing you in the future in person, I think, in 3D. That's our only message to all of you. And thank you for listening.
Yeah, just to reiterate, 3D is definitely the way forward in the new year, isn't it? And for anybody that can make it down to Miami in February, which is where I used to live for a year or two, I very much look forward to seeing you there. But it's been really enjoyable, actually. Thank you very much for having us.
Again, thank you, Adrian. Thank you, Mel. Thank you, Miles. And thank you, Sima, for all your insight. We really appreciate that. We also want to thank each and everyone in the audience for taking the time to join us today. We understand you have many options with your time being limited, and we thank you for taking your time and make a choice to be part of our program today. And be sure to mark your calendar for next year. We can kick off the season for 2022 on January 11th and feature two leaders in the marketplace, Vicky Carter from Deputy Chair of Lloyd's Council and also Chairman of Global Capital for Guy Carpenter, as well as Chris Moore, Head of iBot, part of the Apollo Syndicate. And please also take a moment to answer the survey questions on the screen. We love your feedback to make the program better in the future. At the same time, let's stay connected and have a wonderful season and happy holidays. Thank you again. Happy holidays.